So Canada just officially canceled Black Friday for American retailers. We aren't talking about a simple tax or a tariff. This was a legislative mechanism designed so precisely that even a giant like Walmart was left completely helpless. Target, Costco, and every US-owned chain on Canadian soil watched their biggest revenue day of the year vanish. It was as if someone reached into the calendar and simply erased their entire profit margin. They surgically removed the 24-hour window that determines if American retail ends the year in the green or the red. This is the most sacred day in commerce, the day the entire industry is named for. The day that shifts companies from red ink to black just got deleted in America's largest export market. A foreign government found a hidden vulnerability and exploited it with the precision of a scalpel. Within 48 hours, Walmart stock plummeted 9.3% in one session. That is the largest single-day drop in their history, and it wasn't caused by a recession or a pandemic. Target lost $14.7 billion. Costco fell 6%. Amazon North America pulled its holiday guidance entirely, citing what they called unprecedented regulatory disruption in a core international market. Combined, American retailers lost over $62 billion in market value in just 2 trading days. And it wasn't because consumers stopped wanting to shop. Demand didn't disappear, and the economy didn't shrink. A foreign government simply took away the one day American retail cannot survive without. The spending didn't vanish, it was redirected. Every dollar that would have hit an American register went to a Canadian one. This produced record November revenues for Canadian Tire, Loblaws, and Hudson's Bay. Hundreds of local small businesses thrived while their American competitors were left bleeding across the border. Warren Buffett, the man who built his career on understanding where value concentrates and where it is vulnerable, is the largest holder of retail investments in American history. He says this attack exposes a catastrophic weakness that CEOs have been calling a strength for decades. But it's what Carney said when American journalists asked if canceling Black Friday went too far that really matters. Every retail analyst and strategist is now quoting those words. You and I need to look at how you actually cancel a shopping holiday in another country and why Target and Walmart were the primary targets. Why Walmart and Target specifically were the targets is critical. We have to ask what $62 billion in losses means for millions of American retirement accounts. Buffett says this changes everything for companies built around a single calendar event. This isn't just a trade dispute. A foreign government proved they could reach inside our economy and remove the one-day retail needs to survive. Hit subscribe because the holidays are 8 weeks away and the damage is coming. Let's explain exactly. Here is how you cancel Black Friday abroad. The mechanism is more sophisticated and devastating than anything we have seen in the trade war. It reveals a massive vulnerability in the international business model. Nobody mapped this weakness until Carney's trade team drove a truck through it. Canada passed emergency commercial sovereignty legislation called the Domestic Consumer Protection and Fair Competition Act. This act imposed 3 interlocking restrictions during the 10-day window from November 20th through November 30th. The first provision was a 100% foreign retail surcharge on all purchases. This wasn't a border tariff. It was a surcharge at the point of sale for any company headquartered outside Canada. That means every transaction at Walmart, Target, and Costco instantly doubled in price for the shopper. A television listed for $400 at Walmart Canada suddenly cost $800 at the register. But that same TV at Canadian Tire, which is exempt, still cost $400. The math is simple. No shopper pays double when the identical product is regular price across the street. This surcharge didn't technically ban Americans from selling, it just made buying from them completely irrational. The second provision was a mandate. All retailers in Canada during that window had to source at least 75% of their inventory from Canadian manufacturers or Canadian-based suppliers. American retailers rely on U.S. distribution networks, warehouses, and product lines. They simply cannot restructure their entire inventory in a matter of weeks. Walmart Canada is optimized to move American goods. It isn't built to source 75% Canadian products on short notice. The penalty for failing to comply? A total suspension of their operating license. Retailers that can't meet that threshold must either shut their doors or face fines that exceed any potential revenue. It is a complete trap. They announced this 6 weeks before Black Friday. It was just enough time to be legally defensible as reasonable notice, but nowhere near enough time to restructure a supply chain that took decades to build. The third provision was the killing blow. The Canadian government launched a federally funded Canadian Friday counter-promotion. This was a national marketing campaign designed to drive consumers to Canadian-owned stores. Backed by a $200 million budget and celebrity endorsements, they offered a government-guaranteed price match. Canadian retailers could undercut any American Black Friday deal by at least 15%. Simultaneously, emergency regulations banned foreign retailers from using terms like Black Friday, doorbuster, or holiday sale in any Canadian media. That includes TV, radio, digital, and even in-store signage. E-commerce restrictions even blocked Canadian IP addresses from accessing Black Friday deals on Amazon, Walmart, and Target. Plus, Customs added a temporary holiday surcharge on all packages shipped from American retailers. These three provisions worked together as a single, lethal mechanism. The surcharge made American stores uncompetitive, the mandate emptied their shelves, and the counter-promotion redirected all spending. American retailers couldn't adapt or respond before the damage was done. The speed and scale of the fallout revealed a structural reality that Wall Street ignored for years. What looked like a competitive advantage was actually the industry's greatest vulnerability. The entire sector's survival is concentrated into a single calendar event. Walmart's 9.3% decline wiped out approximately $41 billion in market capitalization. That number isn't even proportional to their Canadian revenue. Canada is only 6% of global sales, and Black Friday is about 20% of their annual Canadian revenue. The direct revenue loss was roughly $2.4 billion, but the stock plummeted $41 billion. That $38 billion gap is what we call the contagion premium. Every institutional investor and fund manager asked the same thing after the announcement. If Canada can do this to American retail, who is next? If an ally can cancel Black Friday with domestic laws, can Germany do it? Can Japan or the United Kingdom? The market wasn't just pricing a Canadian loss, it was pricing a global risk. They are worried this template will be replicated in every country where American retailers operate. One Goldman Sachs analyst warned that the risk model for international retail has fundamentally changed. We are no longer just looking at tariffs or currency swings. Now, we are modeling regulatory cancellation risk. The possibility that a host government can surgically remove a major revenue event is a brand new category of risk. You and I are seeing the entire sector being repriced because of it. Target's damage was even worse, because they are concentrated in discretionary goods like electronics and apparel, where Black Friday matters most. Target still carries the scars of their failed exit in 2015. They had finally returned with a leaner model approaching profitability, only to watch their biggest day vanish into thin air. Today, you and I are investigating how that Black Friday cancellation cost Target more than just revenue. It raised the terrifying question of whether Canada was a viable market for them at all. This triggered a massive investor sell-off as people realized a second Canadian retreat was likely. Target stock crashed 11% in 3 days, leaving the CEO to issue a statement that sounded both furious and completely helpless. We have invested billions of dollars in Canadian operations expecting that the rules of commerce would be applied fairly. A government surcharge targeting only foreign retailers is simply not fair competition. It is expropriation by another name. While legally precise, the statement was strategically useless. Canadian lawyers had drafted the legislation specifically to ensure it stayed within the law. The law protected Canada's sovereign right to regulate business on its own soil. No international trade body was going to tell a democracy it couldn't set its own retail terms within its borders. The White House response was immediate and predictably counterproductive. Within 90 minutes of the announcement, Trump was on social media lashing out at the decision. He called it a pathetic and desperate move. He predicted Canadian stores would sit empty because nobody wants their garbage, then threatened a 200% tariff on all Canadian goods entering the United States. It was an empty threat, and analysts knew it instantly. A 200% tariff on Canadian consumer goods would only raise prices for American shoppers on almost everything. Prices would spike on lumber, maple syrup, and agricultural products crossing the border daily. It would effectively punish American consumers for a policy that only affected corporations on Canadian soil. This retaliation would hurt Americans, not Canadians. White House advisors reportedly told the president this in a meeting that ended with Trump demanding they find something that hurts them, not us. His senior trade advisor met that demand with a silence long enough for everyone to realize no such option existed. Behind the scenes, chaos was already unfolding. Within hours, the CEOs of Walmart and Target were on an emergency call with commerce officials. The 90-minute call produced nothing. The retailers wanted the government to pressure Canada through diplomacy. The administration wanted the retailers to publicly blame Canada rather than the ongoing trade war. It was a complete standoff between the corporate world and the White House. Neither side got what they wanted. An executive on that call later told a financial journalist, "We asked the government for help, but they just asked us for a press release. Our stores are dark, our stock is cratering, and the government only offers a communication strategy." That was the moment I realized we were on our own. A retail association leader was even more direct. His statement was read across every financial network by the end of the day. He reminded everyone that the American retail industry did not start this trade war. We did not escalate this trade war, and we are now paying the heavy price for a conflict meant to protect American business. Instead, it has handed a foreign government the most effective weapon ever deployed against our retailers. Of all the pressure points Carney could have hit, why choose something that sounds like a culture war? Because it isn't one. It is a calculated and precise economic strike. It is the most precise strike in this entire confrontation. To understand it, you and I have to see what Carney saw when he analyzed American economic vulnerabilities. Previous trade actions targeted industries most voters never see, like energy or semiconductors. Those caused real damage, but to the average person, that damage felt abstract. It only appeared in policy papers or supply chain reports. Most voters don't track port logistics or rare earth elements, but every single American voter knows exactly what a Walmart is. Every voter has been inside a Target. Everyone has either shopped on Black Friday or watched the news footage of the crowds. When you cancel that day for American retailers, the impact is immediate. You don't just cause financial loss, you cause visible, personal, and emotional damage that reaches into every single congressional district in the country. This hits every community and every household. It is Main Street damage that affects Main Street votes. The political precision of this move was absolutely devastating. We have to remember that Walmart alone employs 1.6 million Americans. Target employs 400,000 people. When these stocks crash, every politician representing a store or warehouse feels the heat. They hear from constituents whose retirement accounts just shrank and whose neighbors' jobs are suddenly at risk. Every county and town large enough to have a parking lot feels this. The cultural dimension made it worse because Black Friday isn't even a Canadian tradition. It was an American commercial holiday exported to Canada just to funnel consumer spending into corporate revenue. Carney wasn't canceling a piece of Canadian culture. He canceled an American operation extracting money on Canadian soil. Reframing it as extraction rather than commerce made the policy politically bulletproof in Canada and devastating for retailers. Here is the paradox no one in business saw coming. It was hiding in plain sight because the vulnerability was disguised as a strength for decades. American retailers expanded into Canada aggressively because the market seemed perfect for international growth. It was wealthy, culturally aligned, and right next door. It was governed by familiar institutions, so retailers treated it as a domestic extension. That ease of expansion created a dangerous dependency on Canadian revenue as a structural pillar. Those earnings became baked into quarterly growth and investor expectations. Nobody modeled the risk that an ally like Canada, a market so familiar, could suddenly become hostile. No one stress-tested for a scenario where Canada fought back using its sovereign regulatory authority. It was the one tool American retailers had no defense against. They built their most profitable day on foreign ground and assumed it would never shift, but the ground just shifted beneath them. Finally, Carney was asked the big question. A journalist from the Wall Street Journal asked if canceling Black Friday was going too far. Carney looked at the reporter with the composed patience of someone who had prepared for this exact moment. He knew his answer would travel further than anything else he said that day. He simply stated that Black Friday is not a Canadian holiday. He called it an American extraction strategy operating on Canadian soil and said they simply ended that extraction. The room fell into a silence of sudden recognition. Every analyst and official understood that one sentence reframed the entire debate. Black Friday was no longer a disrupted event. It was an extraction operation that had been shut down. Within 15 minutes, the phrase ended, the extraction was trending in 11 countries. Within an hour, it was the lead headline on Bloomberg, the Financial Times, Reuters, and every major Canadian newspaper. Within a day, it was the only phrase experts and international media used to describe the policy. It wasn't a cancellation anymore. It was the ending of an extraction. That reframe was the real weapon. It was more devastating than the surcharge because it changed how the world viewed foreign markets. Even Warren Buffett noticed the structural flaw. He pointed to the structural flaw this attack exposed and the universal principle that explains it. Companies that build their survival around a single event are the most fragile in any economy, regardless of their size. Over 70 years of investing, Warren Buffett noticed a pattern. Most CEOs ignore a specific risk until it wipes them out. The deadliest vulnerability is the one you build your entire strategy on. It is not the risk you hedge or the one your committee plans for. It is the one you use for hiring, inventory, and marketing budgets. You even build your stock valuation around it. Today, you and I are going to look at why that dependency is so dangerous. Host governments eventually target your core pillar. When they do, the damage is never proportional. It is existential. You do not just lose money, you lose the entire architecture built to produce it. Those systems take years to build, but they can break in just seconds. American retail giants bet their entire financial model on a single day. They treated revenue concentration like an achievement. In reality, they were just building a massive vulnerability. Concentration is never an achievement. It is just fragility wearing a tuxedo. It looks great when times are good because it maximizes efficiency. But that dependency is exactly what makes you vulnerable. When that one pillar is pulled, you collapse completely. A company earning money every day can survive a single loss. But a business that gets 20% of its revenue in one day, that business cannot survive losing that window. A former central banker with a calculator just proved this. The parallel to Berkshire Hathaway was both precise and devastating. I once owned a retail investment where 38% of annual profit came from one quarter. Most of it was tied to a single promotional event. I warned the CEO back then. I told him to diversify because depending on one event is a recipe for catastrophe. He insisted it was untouchable. It had grown for 15 years and he claimed competitors could not match it. 3 years later, new regulations killed that promotional window entirely. The company lost 22% of its revenue overnight. When I hear CEOs say Black Friday is untouchable, I get worried. I hear the same thing I heard 15 years ago. The lesson remains. Nothing existing on someone else's soil, under their laws and sovereign authority, is ever truly untouchable. His closing sentence was quiet but devastating. These companies built their most profitable day on foreign soil. In doing so, they forgot the most basic rule in business. The landlord always has the final word. He let that sit for a moment before adding that now every landlord in the world knows the rent just went up. The consequences hit Walmart and Target hard. It went beyond stock tickers. It hit parts of the American economy that people never associate with a single shopping day in late November. Billions of dollars in seasonal inventory sat in Canadian warehouses. Because of the restricted window, that merchandise was suddenly unsellable and stuck in storage. Merchandise was manufactured and stored at massive cost, but it could not be moved or sold. These goods could not be economically returned across the border. Logistics contracts were non-refundable. Seasonal hiring for Canadian operations was canceled. Tens of thousands of temporary positions vanished. The ripple effect across the border was immediate and painful for the domestic economy. American suppliers for Walmart and Target were crushed. Small manufacturers and regional producers who rely on Black Friday for a quarter of their revenue saw their orders vanish. Production stopped and warehouses filled with goods that had no buyer. The human cost was concentrated in places that rarely make the national news. A warehouse in rural Ontario sent 400 workers home in a single week. Meanwhile, a toy manufacturer in Ohio was left with 3 million units and nowhere to go. The manufacturer had no buyer and no storage for 3 million units. Trucking schedules on both sides of the border collapsed as shipments were canceled, rerouted, or returned. Let's look at the front lines. One logistics executive described his hub as a parking lot of loaded trucks. 38 trailers are sitting here burning money because nobody knows what to do. This is the real, granular damage. We are not just talking about abstract billions, but loaded trucks sitting idle in parking lots. Workers were sent home and factories went quiet. This story reached voters who never read financial reports. On the other side of the border, the data told a very different story. Canadian Tire reported its highest revenue in over 100 years. Loblaws, the largest retailer in Canada, saw sales jump 37% above the previous year. Even Hudson's Bay saw a complete reversal of a decade-long decline. Small, independent shops and family businesses reported the best November in their history. The money did not evaporate. It just moved from American registers to Canadian ones. It flowed from American profits into Canadian community economies. It moved from U.S. shareholders to Canadian workers. This zero-sum transfer was the most elegant part of the entire policy. Canada did not stop spending. They redirected it. They created a Canadian stimulus while wounding the American economy with a single law. U.S. politics fractured immediately. The lines were not partisan, but geographic and economic. They were drawn between districts with Walmart hubs and those with Canadian Tire franchises. The Arkansas governor stood outside Walmart headquarters. He noted that this company employs more people in his state than any other private business. $41 billion in value vanished because the trade war provoked a foreign government to cancel their most important day. He demanded an explanation for the workers. A congresswoman from Minnesota pointed out that her constituents rely on Target stores. Their retirement and college funds depend on these companies staying healthy. She argued that the government's trade policy just gave a foreign country a playbook to destroy their profit. That is not America first. That is America exposed. Retailers feared the international template effect most. The Canadian mechanism was not a secret or complex. It did not rely on any unique features of Canadian law. Any nation with authority over its own soil could replicate this framework. EU officials in Brussels requested briefings on the legislation within 72 hours. Australia's Consumer Authority announced a review of foreign retailer regulations. Japan's Trade Ministry noted the Canadian approach represents an innovative framework that merits careful study. Every statement was diplomatic and measured, but each one carried the exact same underlying message. They see what Canada did and are evaluating whether to do it themselves. One analyst noted that the structural shift was clear across every financial publication. Stick with me here. Mark Carney did more than cancel one day. He proved it could be done anywhere. That proof is now the top risk in international retail. Here is where we stand. Canada passed laws imposing a 100% surcharge on foreign retailers and mandated domestic sourcing. They effectively canceled Black Friday for American chains. Walmart lost $41 billion in market value. Target lost $14.7 billion. The broader American retail sector shed $62 billion in total value. Billions in inventory are currently rotting in Canadian warehouses. Seasonal jobs have vanished. But the spending didn't disappear. It was funneled directly into local hands. Canadian retailers saw record-breaking November profits while their American competitors bled out. When asked if banning Black Friday was extreme, Carney gave a 17-word answer that every CEO and analyst is now desperately trying to solve. Black Friday isn't a Canadian holiday. It's an American strategy for draining wealth while operating on our soil. They simply shut down the drain. As Warren Buffett explained, concentration isn't a strategy, it's a massive vulnerability. The most profitable day of the year becomes the deadliest target the second someone realizes it is the same day for everyone. Can U.S. brands survive when their biggest payday is ripped away? You and I have to wonder if Walmart or Target can ever recover their northern footprint. New laws are now permanently steering shoppers away from foreign brands. Can the U.S. global expansion model survive if other countries follow this specific legislation? Any host government in any country could now use this Canadian playbook to restrict or redirect the revenue events that American companies depend on. This should deeply concern every American who shops at these stores, works in them, or holds their stock. Consider your retirement fund. A foreign government just legally gutted the one single day that American retail cannot survive without. They did it surgically, they did it swiftly, and most importantly, they did it legally. It was done with total public support. Where has the real power in this trade relationship actually been hiding all these years? Trump tried to use trade pressure to force Canada into submission, but instead, he taught them exactly where American business was most vulnerable. Carney didn't hesitate. He struck with surgical precision on the one day that mattered most. He tried to demonstrate that American economic power was unchallengeable. Instead, he provoked the first foreign government cancellation of our most sacred commercial day and watched $62 billion evaporate from companies that employ millions. He tried to prove the U.S. economy was a fortress. Instead, he handed every nation on Earth a blueprint on exactly how to dismantle it. Now, you and I can see the template is available to any government with a legislature. Carney dropped 17 words that Walmart still hasn't answered. Target still hasn't recovered, and Wall Street is still trying to price in the new reality. Every American retailer with global stores is now scrambling for a backup plan. This is the moment history may remember as the world discovering that America's greatest strength was also its greatest weakness. Black Friday isn't a Canadian holiday, It's an American revenue extraction strategy. We simply ended the extraction.